Hello everyone. Welcome to the final day of our futures trading workshop, right? Where the whole point of this was to learn to trade any market condition realistically. I want to introduce how you can start your futures journey and look to develop as a trader after you learn the basics that we've gone through over the past few videos, right? So let's jump right into this. And we've gone through all of these. It's the final day. We've gone through just the general introduction of the futures trading market. We've gone through an introduction of future risk market and participant psychology, along with understanding how participants actually move into the market, the difference between strong-handed and weak-handed traders. And then we went into futures movement profiles and distributions as well, finally going through order flow and reading the DOM. I know a lot of people were pretty excited about that one. And then today we are going to go through, well, I would say a shorter presentation of understanding the development as a futures trader and some of the options and some of the options as well as steps to take when you're in the futures markets and trying to grow as a futures trader. So the goal throughout this, right, this 5-day presentation was naturally how to navigate any market condition in the futures market using futures equities, right, regardless of the volatility, regardless of the volume, even if you do have doubts, because we've done it. We've had 3 live trading classes throughout the last week or so. And we've been navigating chop, direction, everything realistically just by understanding a few very simple tools. So I hope that throughout this, I've shown you guys that you do have the ability with those 3 very simple tools. I'm talking about understanding where market participants are, the depth of market, and volume profiles. Understanding those 3 main principles and tools, you can apply this to any futures market condition, right? Volatile, not volatile. It all plays together. So we also wanted to build a step-by-step system to create self-confidence in how you trade the markets, regardless of how fast or slow. So in today's agenda, right, we're going to be going through some strategy and psychology stuff, account sizing start, because I know a lot of people might be curious as to what I think a realistic account size start is, because all these derivatives, all of these like futures options, blah, 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 everyone always promises you that you can start with $100 and turn to like 7 billion, right? It's not the case. I want to make realistic goals and assumptions here based on account sizing. Turning like $200-300 into something massive is not a normal thing. I don't think that it's realistic to peddle that as well. We're going to go through some ideas about demo trading and practicing and micro futures and scaling. And then at the end of the workshop, what is next? What's the next step? So 2 keys to trading, right? You have 2 things as a trader to stand a chance, right? These 2 things is what you need. 1, a trading strategy, right? Very plain and simple. And then 2, trading psychology. These go hand in hand, right? You can't have one and then not have the other, right? You could have the craziest psychology of all time, but if you have a strategy of just seeing what happens, it's just not going to work out, right? You can have a strategy as well, but if you're not disciplined enough to apply that strategy, it's not going to work either, right? This is how you can develop an edge in trading. The goal is always create an edge, right? In the market, there's so many market participants, and having a great strategy isn't necessarily the way to create an edge, right? You have to have strengths when you're trading. So trading edges are actually how you do succeed in the markets, right? And it's not something that is easily developed, right, or taught. It varies drastically person by person as well. In terms of a trading strategy, right, you need to have a trading strategy regardless of what it is, right? I don't comment on anyone's trading strategies because if I don't understand them, then there's no point, right? As long as they work, then I think it's a pretty good strategy. Most importantly, the idea is to follow said strategy, right? Ideally, traders will backtest their strategy as long as it's not discretionary. You do have the ability to look back test it, demo trade it, right, and understand its capabilities and if it works. For example, the strategy that I've been showing you guys, regardless of the market conditions, can be used. It's a very simple volume profile inflection point strategy, right? Finding where big distributions are and trading around those. Distribution theory and depth of market, right? The depth of market, DOM, order flow, and distribution theory, 2 very simple concepts. And the reason why there's a higher probability of this actually succeeding is that these are the cornerstones of volume and how the markets actually move based on big market participation. So hence the strategy focuses around large inflection points, acceptance and rejection of blocks, as we've been talking about, finding your distributions and playing around those distributions based on order flow or the assumption that traders will hold or fail, right? Based on where large market participants are realistically going to be active. So as an example, right, we had this on Friday. This was a blockbuster day for sure. We had another day today, right? We talked about 43.03.05 in our live trading room this morning, and just wait for that area, sell it, and enjoy. So this is another example. 42.50 is the end of a prior distribution and the start of a new distribution to push prices higher into the 4300s. Acceptance above is the expectation of balance, right? You expect the balance, meaning that price is going to rotate within that large area, tagging the next ledge to the upside. Or, right, in other terms, the long should open up as long as we accept above this area. And that's the idea of distribution. Remember, distribution is a balance where a lot of volume trades, and it's an area where traders, or I would say price, feels at home, right? Quote unquote home. It's a balanced area where price feels safe and would want to explore into that area. So we use the DOM for confirmation. We talked about the trades long 60s and long 50s into the upside, move up to targeting ideally 4300s. When we talk about trading psychology, this is the other part, right? The second part is trading psychology in terms of understanding how to develop a trading edge realistically. You can't have strategy without psychology. You can't have psychology without strategy. And trading psychology is very difficult, right? Trading psychology is difficult to develop if you're not there already, right? It stops a lot of traders from fulfilling their full potential, right? It sometimes requires, honestly, like deeper psychological work that might not necessarily be trading related, right? But you do need both of these to develop a concrete edge in the market, right? This is a very difficult task to accomplish if you're not already there, right? It's very, very dependent on you, right? It's difficult for other people to interject and help you with it because it's something that you have to find the discipline within yourself to actually work on and continuously do, right? It's difficult when you have like a red day in trading and you're going through your trades or whatever it is. And you can also, when you like, let's say you have a red day, right? You've got a red day and you have to go through your trades, you have to go through your execution, the replay, the review, and it's not necessarily something you want to relive, right? If it's a red day, it's not like you're going to sit there and be happy about this. But realistically, it's one of the main things that you have to do as a trader to develop, right? Otherwise, it's going to be very, very difficult for you to progress. So when we talk about trading psychology, right, you can get tips, you can get like insight, you can get a lot of external help, but at the end of the day, if it's not something that you're willing to do, if your psychology isn't more developed, right, then it's going to be very, very difficult for you to get to those goals that you have, right? And I think developing a strategy and understanding a strategy is fairly simple, but the application and working on your mind is something else, right? The most difficult aspect about trading is going to be the psychology if it's not a strong suit, right? Being able to bounce back, being able to have confidence in yourself, being able to understand that trading is not one of those things where you take the theory and you apply it and instantaneously, right? There's growth. It's one of those things where you have to understand that not every trade is going to work the first time. The best trades are often not ones that you hit on the first try, right? So having the idea that everything is far from perfection is a great start in trading. Understanding the idea that you're there for the opportunity rather than running away from the risk is a good start as well. So at the end of the day, it all comes down to discipline realistically. You have to instill your own discipline and work on things that would ruin your trading or ruin your growth potential, right? So if it's over trading, if it's under trading, if it's revenge trading, right? There's a whole psychology course that George has done in the past, which helps um, gauge a lot of these issues and gives you ideas of how you can actually progress through those. So there's a self-sabotage cycle that's a very, very common in trading, where you end up in deeper holes because of these prime issues, like some of them that I'd mentioned, like revenge trading, like whatever the case is. But at the end of the day, right, developing an edge is realistically how you can succeed in the markets, right? And it's going to stem from understanding that the psychological aspect is difficult and something that you do have to work on. The defining factor of actually making money in the markets is an edge, right? An edge, it's something that you develop yourself. You can get influence from others if they're willing to share. You can get help from others, but at the end of the day, no one's going to trade but you, right? You're going to trade your own account, right? You're going to be the one actively doing it. So you have to understand your strengths, right? Understand your strengths and understand your weaknesses. In trading, the idea is not working on your weaknesses. It's limiting your weaknesses and making your strengths better, because it's a risk thing, right? It's a risk career where you have to understand that you take on risk every time you enter the market. And as long as you can limit the risk, then you can increase the reward, right? And that's where this all comes from. Work on strengths, limit weaknesses, limit risk, expand gains. So, for example, some areas that traders might be good at, right? If you're good at taking smaller losses, good at waiting for your trade, being patient, good at trailing or picking up big winners and small losers, right? That's ideal. Good at reading the DOM, good at walking away, even, right? Good at trading at whatever certain sessions of the day, certain times of the day, good at scalping, right? The list is endless. And you have to find what resonates best with you, your personality, your abilities, and focus on building that up to create more of an edge. For me, for example, right, I'm better at trading inflection points based on large distributions than I am trading breakouts or pullbacks or whatever the case may be. And I'm looking for those large areas where prices are most likely to inflect. And that doesn't even have to happen every day, right? If you wait for those big distributions, you have to understand that the trades that you take within and around should be sized smaller. So being aware of what your sizing is, being aware of the conditions you're trading, right? Understanding all of these things helps you develop and build an edge. So it all still comes down to discipline. And this is another thing that we do have to talk about, account sizing, because this stems from discipline as well. No matter how little, how much money you have, realistically understanding how much money you should start with and the growth path behind that is where you can make a very, very big difference, right? For example, someone with very little money, let's say they have like a couple of $100 and they want to start doing this. Well, you realistically, to trade, you do have to have capital, right? It's not going to happen with $200. You need capital and you should work on building that up, right? Someone maybe with a lot of money is willing to jump in with, like, let's say they have $100,000 account and they're learning to do this and they want to just trade minis right off the bat to start making money. They have to understand that it's great that you have a larger quantity, but you should start with a smaller quantity, because realistically at the beginning you are paying tuition to understand how these markets work. But that's the beauty of micros and practicing your strategy and demo. So I'm going to talk about those as well. But we did talk about this during day one, account sizing. How much do you realistically need to start trading? We talked about discount brokers and other brokers and where there are large differences, very, very heavy leverage, and where you can meet in the middle. So you're not over leveraged and oversized, over positioned with a smaller account, taking larger losses. So if you're a new trader starting off with micros and only tuition money is an ideal start, right? I'm not saying that you should just expect to blow all of this money, but understand that it is more so tuition at the beginning. So that's why starting with a smaller amount and learning the way through it is, right, ideal. It doesn't matter how much you have. I think everyone should understand that starting with micros is the ideal place to start, because you learn so much with just even having a smidge of risk in the market. It's very, very different from trading demo. You don't care about demo. There's no risk in it for you. When you trade micros, even understanding that every point is only $5 of risk, right? You're still dipping your toes in something that actually matters, right? So, for example, if you start an account and maybe you start with 2 to 3 micros as your max sizing, right? Understanding position sizing is very important as well. Allow yourself about a grand to 1500 per micro, right? As your margin, quote unquote. Yes, I know that AMP offers $40 micro margin, but realistically, you open a $200 account, you're trading micros, right? You take one like 10-point loss in a day, right? You've burnt through a quarter of that account already. So understanding with micros, this is where you can learn and where you can develop. Have a realistic set amount in the account as your quote unquote margin, right? Your self-discipline margin. For example, let's say you use a total of 2 micros, the account size should be somewhere between 2 to 3 grand. If you're using 3 to 4 grand, right? Trading minis, like I said, I would suggest 5 to 7 grand per contract. I don't think people should really venture into the minis unless they have one very, very good like very good understanding of the market and success with micros, being able to scale, understanding your position sizing. Pretty much a developed trader with micros then should go into minis, right? Because psychologically 10x the risk per contract is can really shake people up. So I suggest 5 to 7 grand per contract for minis, right? Understanding that 1 point risk is $50 per contract. There's so many ways to make money with micros, right? You can size larger. Even sometimes I'll trade micros and size larger, but it's understanding the risk parameters associated with this. And if you really, really want to do this, like as a career, as something longer term, you have to take it very, very seriously. And this is why I'm telling you guys all this information, where I think like this is an honest opinion of how this all works, right? I could sit here and lie and be like, yeah, you only need 200, $100 to start trading, and you can turn that into like 10 grand easily. It's just not true, right? If you want to make this work and you want to do this longer term, it has to be step by step. So developing your strategy starts from understanding the components of the market, right? We've laid out the main components throughout this. Number one, big money or strong-handed market participants, where you can find them, where their stops can be, how they move into the market, right? Where they're probably waiting. We talked about volume profile. Where does volume sit? And distribution theory, causing expected price moves. When you understand distribution theory, you understand that price travels from balance to balance to balance, and in between is imbalanced and will run through those imbalances fairly quickly. We talked about the depth of market and order flow, what market reactivity is, how strong-handed traders interact with weak-handed traders, stuck traders, real traders, bearish versus bullish DOMs, how order flow comes in and leaves the market, creating moves. Then you need to understand how to actually scale into your account. So why don't we take a look at what I mean by that? So demo to micros, practice, 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 practice. You always should practice your strategy and make sure that you understand what it is you're trading, how you're trading, what the expected percent profitability and the returns are from your strategy. That's why you should practice and demo, instill some confidence in what you've learned, and treat it like something real, right? Treat demo as if it's something real. Because if you go in there and demo and you throw in like 50 lots and you just start clicking about up, down, short, long, short, long, short, long, you're not going to learn anything, right? You want to learn, and you want to spend as little time as possible in demo learning so you can actually do this in the real world. Input trading has a lot of positives and negatives, right? You want to use this tool for a shorter period of time to confirm the success of your strategy, right? Tweak it a little before you actually present it in a live environment. But you don't want to stay in sim or demo for too long, right? A lot of people can learn a lot of bad habits in this when they spend so much time in there that translate into a live environment. A lot of people scurry away into demo as like a safety net when they don't want to be in the markets, and then don't take this very seriously. On the higher end, 2 to 3 months, if you do it very seriously, should be like a cap, I would say, in demo. I don't think that a lot of people should spend too much time in there. That's why we have the micros, and the risk is fairly limited there as long as you're not doing crazy stuff, right? You should be learning a lot in the micro environment. Demo to micro. So after your stint in demo, a lot of traders want to make the big bucks and they want to do it quickly. It's one of the main components of trading. That's why it attracts so many people, because you see everyone on social media making like 20K a day, 100K a day, like $3,000 every single day, right? you want to be at that level, you want the financial freedom, but realistically, the people who actually do it, right? It takes time to get there, and scaling and learning, it's a longer process than you think. But there's always a silver lining in it, because longer process or not, this is one of the only careers that you can just jump over every promotion and very quickly once you get the groundwork done. I think that everyone should understand the use of micros and their ability first, right? You can scale up in micros. Micros are low risk in comparison to the mini. They're still a learning tool to help hone your strategy in a low risk environment, but you can also make very good money trading micros. Don't think that you need minis to make money or good money, right? Um, there's a lot of traders out there that only trade micros because they want XYZ amount in their account to be able to trade the minis more comfortably, right? And to get to that point, still trade micros. Micros, you can put on size, you can catch larger moves, you can learn how to trade multiple lots in micros much better than you can in minis. People get very, very ahead of themselves and learn quickly that micros are a good place to start, right? I know countless of people that I was they asked me about going from demo into the live environment. We had chats. I said, hey, just try the micros. Just do yourself a favor, trade the micros, learn from the micros. No, I'm going to the minis. Okay, go to the minis. Okay, after a few days, okay, you know what, you were right, I'm going back to the micros. What happened? Well, the minis are too much risk, right? There are a lot of risks for someone that's newly entering the market. The micros are like a godsend. When I started trading, I was trading with minis and learning with minis, and I tell you, it does damage psychology when you're learning in that big of an asset environment, a live environment, when the asset's that much leverage and that risky. When you trade micros, it more helps you hone your skills than anything, and doesn't do damage to the account and your psychology. Like I said, I suggest that everyone start off with 1 to 3 micros realistically. You'll learn a lot about yourself. You'll learn a lot about your trading, entering into a live environment, where even just a tiny bit of risk can help you handle real money, can help you scale, can help you just learn how these markets actually move. Trailing at the beginning is a very hard task. Realistically, everyone wants to catch the whole move, every move, and make fast money, but it's just not realistic, right? Like with micros, you can trail for sure, but I think that just understanding to take full profits at the beginning and learning to trail slowly is a better way, and not holding the full size. Like I talked about this in the live trading room this morning. I don't hold my full size until my expected move, because I don't like the expected move is one, very difficult to achieve with a high probability, so you want to take profit along the way, and two, it's not realistic to catch every single move and every big move. Slow down your process, give yourself time, don't compare yourself with others, right? Like learn from people who have been doing this and who you might admire. Don't think that just because you see people around doing this, it's one, an easy thing, and two, you're going to get to that level like very, very quickly. Some people learn faster than others, some people learn slower than others. Give yourself the time that you know that you learn at, right? Understand that. So understand that this is a career like any other, but you have to perform, right? And if you perform, you're going to get promoted extremely fast, right? It's not one of those things where you wait around. It can be a very short time between you making $100 to $200 a day to you making $1,000 to $2,000 a day. It could be within a year, it could be within months, right? Depending on you as a trader and your level of discipline. We have a lot of traders at TPA that have multi-$100 days, $300, $400, $600 just trading micros, right? You can go and ask them there in Discord, but there's a lot of people, and like sometimes when I want to cut my risk down, right, I'll even go into the micros and trade the micros, right? You can still have great days trading micros. Trading micros on Sierra, a bit of information. I would use the minis DOM, right? The S&P 500 mini DOM, and trade the micros on the micro DOM and use mini order flow. So everything is it's based on the minis because it's the higher liquidity asset. And then you're just trading on the micros. Starting off with 1 to 3 micros, you should only increase size when you do have consistent results and comfort with the size that you're using. Oversizing is a killer, right? You should really, really avoid oversizing because a lot of demons do come out. It's a tough spot when you're trading, over trading, revenge trading. A lot of difficult things can happen when you're oversized past your comfort zone, because there's a certain point where you feel like your palms are getting sweaty and heartbeats are getting faster when you're oversized. And that's not a place you should be when you're trading. You want to be fairly comfortable in trading and continuously repeat the same process, make it as boring as possible. The excitement is overrated, right? We're here for realistically a goal, right? A goal to generate money from the market. And you don't want to be in a nervous situation every time you trade, right? If you're nervous and you're like super stressed and you're always shaking when you're in trades, you're most likely oversized, right? You're most likely oversized. So, like I said, even sometimes I'll trade like 8 to 20 micros at a time when I'm feeling off or I want to take less risk or I can't or I don't read the market movement as well. This might seem like a lot of size, but 20 micros equivalent to 2 minis. So I want the ability to be able to trail, to be able to de-risk, to be able to move my um, contracts around. So I'd prefer trading larger size on micros than 1 or 2 minis. Yes, I understand the commission doesn't add up if you're trading that many micros, but that's not necessarily a factor when you're trading a specific strategy, in my opinion. So this is all I did want to talk about. Like I said, is going to be shorter. I do want to thank everyone for your attention today. We're at the end. I wanted to kind of wrap this up slightly before talking about what comes next. We talked about scaling today. We talked about risk management, kind of a lot more of the psychology aspect and like what I perceive as the truth to understanding how to grow and develop as a trader. I do want to thank everyone for being a part of this workshop. I hope you learned a lot about my trading process and how I use this to navigate any market condition. That was the goal of all of this. So what was my promise? I wanted to show you 3 very simple tools, right? Understanding market participant psychology, volume profiles, and depth of market that can be applied to the futures market regardless of the conditions. That's what I wanted to show you today.